everybody, and good morning. Yeah, I'm running a little late this morning. Had to do some work over at the church. A little bit of volunteer work, a little bit of repair biz today. So glad to be with you. It is September 6, 2024. We're kind of in the middle of this kind of a little bit of a heat wave, and you never know if it's going to be the last one of the season, and then I'll be crying my eyes out, right? Because winter's coming, and rain, and nasty, and windy. I don't know about the people that say, I love that kind of weather. Really? All right, move to Scotland then. Anyway, I do hope your day is off to a good start. I was asked recently, I don't weigh in too much because things take time to unfold. And certainly what's happened in over the last few years, well, specifically somebody asked me to weigh in on the economy. What do you think about the markets these days and all that? You know, I've been an advocate of gold and silver. I'm an advocate of don't get too excited about interest rates coming down. There's large budget deficits, but I think things take a long time to unwind. And back in 2022, I really believed that things were coming to a head in 2022. We would have some terrible downdrafts and then recover and go into new highs, terrible downdrafts and recover onto new highs. And timing is always the issue when it comes to things like markets. Markets will always go further than it seems like it's logically possible to go upward because of psychology and momentum. And on the downside, they seem to probe depths that are beyond belief when they do start into a bear market. And sometimes they can be very vicious. But the thing is, I want to tell you, there's something called, it's almost like Newton's third law of a body in motion tends to remain in motion until it doesn't, right? And for every action, there's an equal and opposite reaction. We know that in physics, and usually through history, it's been the case when you've had unprecedented advances in things like gold and stocks and bonds and things like that, it tends to then usher in a period of unprecedented declines on an order that really matches the magnitude of what preceded it. And because psychology of fear is much stronger than the psychology of greed, this explains why markets always move faster when they go down than when they rise, because people suddenly realize, well, all might not be well in La La Land, and they tend to push the dump button at the same time, which precipitates more, right? And pretty soon you get a snowballing effect. These events are pretty rare, right? These events are pretty rare. But to answer that question, I think you can look at things from kind of a historical point of view. And I always worry when somebody says, well, we're rewriting the old rules don't apply anymore. You don't have to worry. In the old days, we didn't really know. Now we know better. We're smarter. We're wiser. We got better tools for figuring stuff out. But the problem with that type of thinking is that it assumes that human nature also changes. And those of you who have been on the channel for a long time will know one of my big contentions in life is that human nature never changes. People become fearful when things plunge. People become greedy when trees grow to the sky in markets and things. So that will never change. That should be the backdrop curtain, the backdrop scenery of the whole stage of which investing in anything unfolds, that grand stage of human nature, okay? Because people do tend to overshoot, and sometimes they overshoot dramatically. The question is, what are the benchmarks that we use to determine valuation on a basis that we can compare, say 1929 to at the peak of 1929 in the market before the unprecedented 90% drop in the Dow Jones Industrial Average till July of 1932. 1982, when the bull market kicked off here at 777 level on the Dow Jones Industrial Average. Yes, I remember it like it was yesterday because I was on my way to an accounting class for my master's degree. I remember it like it was yesterday on the radio. 30-some point advance, right, like a 5% jump in one day. It was like, wow, unbelievable. 37 points. Imagine that. You do that in 37 seconds today. And then where we are today in terms of relative valuation. Many people would assume, like in 1929, it was just crazy valuations. And in 1982, crazy low valuations. But consider this, one of the most historical guideposts that you can use is what's called the price to earnings ratio of the S&P 500. The Standard & Poor's 500 index of the largest enterprises in public enterprises listed on the exchange. And they take an average of all of these PEs. Now, PE means how much you're willing to pay for $1 of S&P earnings, okay? And believe it or not, today, people are willing to pay over 28 times, $28 for $1 of earnings today, right? $28 to buy $1 of S&P earnings on average. Compare that to 1929, and you might think, well, it must have been like $50 for $1 of earnings back then. No, it was less than 18 then. It's $17.77 per $1 of earnings in the market. Okay, so you can see there's quite a bit difference between the 17.77 of 1929 and the 28.24 of today. We'll just call it this 18 and the 24, the 28 today. It's a big. That's like almost a 50% more overpriced. More you're paying for $1 of earnings in 2024 than they were paying in 1929. How cheap can it go? Well, I remember when the bull market in stocks kicked off in 1982, it was 7.73, less than $8. You could buy $1 of S&P earnings, and what do you get now? 4 times more expensive. On a relative basis, stocks are 4 times more expensive today than they were in 1982, and 50% more expensive than they were in 1929. Well, people say, Rosie, so what? Roosevelt, so what? Right? I mean, it just goes and goes and goes and goes. That's the thing. You never know when, right? It's like the merry-go-round, right? It's like musical chairs. You never quite know when the music is going to stop. And when you get caught out, the consequences can be severe. Now, we've gone along with very interest rates. We've endured 5% to almost 8% mortgage rates and stuff like that. And it's had a slowing effect on the economy. We've seen that in job creation and things like that. So certainly the Fed feels like it's in a position to cut interest rates, but it's not so much of a slam dunk when you think of what we just went through with inflation and things like that, right? So just be aware, and this is the only thing I'm saying today, just be aware of how dearly we're paying up for $1 of earnings today. We're 50% higher pay for $1 of earnings today than in 1929, and 4 times higher than in 1982. Unprecedented in the history of civilization. Market's gone back all the way to the tulips of Holland. This is about as expensive as it gets. Value? Well, I report, you decide. Anyway, guys, thanks so much for watching. Also, remember, we had the AI, right? The big boom of AI, especially from about March of 2024 till about August, where I don't know, what did Nvidia went to $3 trillion or something like that. Well, that's a big signal to the world out there, right? That there's big money to be made in AI. Is there really? I'm not sure. The whole point of AI is you get a lot from a little bit, right? Using an Nvidia chip would mean that one data center could now do with the computing could now do what 50 data centers did. Okay, so you're getting a tremendous amount of efficiency here with these latest chips and things like that. So people want them like crazy. But the other side of the equation is it all takes engineering, it all takes works, and well, we only have so many geniuses out there. And there's only really so much need for AI, because a little AI goes a long, long, long way. Anyway, just some food for thought today, because we are starting to get a few signals that maybe things are slowing down. I'm not in the prediction business, but I just want to say I like my money to go far. Okay, I like my buck to stretch. Right? If somebody tells me I can pay $7.73 a pound for a ribeye steak in 1982, or I can pay $28 a pound for ribeye steak in 2024, well, maybe I'll hang around to see if the less than $8 ribeye steak per pound comes around again. We shall see, guys. Anyway, thanks so much for watching. Enjoy the rest of your day.